Very little introduction, Raamdeo Agrawal. He's been a man who has spoken widely about his investment philosophy, which has predominantly been a value investment philosophy for most of his life. We have Mr. Agrawal today here with us to talk about not just what the last week's been like for the markets, but to give us a much longer perspective on where Indian equities are headed. And to speak with him, I'm joined by my colleague from Bloomberg Quint, Agam Vakil. Well, Agam, hi, and Mr. Agrawal, thank you and welcome to Bloomberg Quint.
Most welcome. This is the first time and I'm very excited.
I am very excited as well. This is your first Facebook Live, isn't it?
Yes.
Okay, great. So we're hoping that all of you will send in many questions for Mr. Agrawal and don't ask for specific stock picks. It'd be nicer if you try and gauge from him all the sort of learnings of his life that have helped him become such a successful investor. I'm going to start by asking what you might call a slightly more shorter term question. Where do we stand today in India's equity markets, given the macroeconomic indicators, where we are from either an inflation point of view, an interest rate point of view, or given what you assess of the earnings season that's just winding down?
Yeah. Menka, thanks for giving this opportunity. And
Delighted.
So, assessing market, this is like you're asking how is the swimming pool for a, Phelps or some swimmer. Market is always ready to welcome the investors.
Okay.
And I'm speaking for the investors, not for the traders.
Right.
And traders, in any case, they can make money in good time as well as bad time. So for investors, when should investors avoid the market? When markets are completely euphoric. When it is so much overpriced that even a shoe boy is giving you tips and IPO market is booming and valuations are crazy and market cap to GDP is more like 1.5, 1.7, 1.8. So we are not in euphoric times. We are not depressed. We are not at 30-40% of GDP, 9-10 P. There is nobody on the street. It's not like that. But right now we are nice, 24-degree temperature. It's a nice shiny afternoon. You must go for shopping, and this is the time to build nice portfolio. India is in a very unique situation. India has low, we always had problem from the oil, so we had high current account deficit. So rupee was always under pressure. That huge problem is not there at all. One, the current governor has done a wonderful job, but more than that, even the God has done a much better job. Oil is at $40. Second is, your monsoon is, after so many years, we have got a ample monsoon. I was seeing today a map. I think barely Punjab and something in northeast, and very small portion is south somewhere. I think Chennai or something. Everything else is either flooded or normal.
Yeah.
So this is after a long time. I'm saying even in Mumbai we are saying after a long time intense monsoon. Yeah. Okay, so this has its own merits, which will play out in the next 4 months. You have inflation under control. Desirable is even lower, but 6% is this thing, not very high. But I think one of the things which people are missing is that what is the global environment. See, we are no more isolated in the world.
Absolutely.
And I don't understand much of global macro, but today, $13 trillion, day after day, the bond prices all over the world is going through the roof and yield is sinking.
Yeah.
Okay, yesterday when you see the FT headlines, because of bond buying, there is a global collapse in the yields in one day.
Yeah.
Today we are at almost at 7 or 7.1 before even the rate cut.
Yeah.
So what we are talking about, the world is awash with the liquidity. Awash with liquidity. We used to curse Greenspan. Today it is multiple times bigger than
Greenspan. That. It's Greenspan to the power of 100, isn't it?
Something like that, and it's still on. That 100 is becoming 110. So we are completely floating. So and India is in a very unique situation. There's one growth economy, large growth economy, which can attract all forms of capital. The issue is how much we desire to get in debts, in bonds, in equities. So the equities which can afford, which are good, which are the corporations which are of the size, which are managed well, and fortunately we are blessed with a lot of good corporations. And if they are reasonably priced and there is a growth, there is no dearth of buyers. You will get some crazy number of buyers for those companies. So this is the time to build a portfolio of good companies. You'll be surprised. They will do well in any case, But there is a icing on the cake that global liquidities can push it to different levels.
Okay. I do want to ask you about when this this party that's going on, the liquidity party, at some point is going to come to an end, and there's going to be this crazy hangover. We will all suffer because of it. But I think maybe I'm sort of jumping many questions before that. I know Agam has a bunch of questions on really what you make of earnings, what you make of valuations.
Sure.
So let's ask you a few more specifics about the domestic markets before we get to the liquidity issue. Agam?
Well, I actually wanted to know about the earnings. Firstly, when it comes to Q4 and Q1 earnings, not everyone is very happy with the earnings. So I want your reading on how you've seen them. And I also want to know if whether or not you expect these earnings to pick up in momentum going forward.
See, earnings will pick up momentum. I mean, nothing. If you ask me, do you know next quarter is going to be much bigger than this quarter? I don't know. I mean,
But
that's
are
not
you
the
happy
outlook.
with this quarter?
Yeah, broadly, my portfolio has done well. See, what?
We should ask you what your portfolio is.
so
That's the
my
key
portfolio,
question here, isn't it?
except for one or two bit of disappointment, not even disaster, everything is fine. In fact, we have got more surprises, positive than negatives.
Okay.
So much.
Okay.
So, what has happened is market has become very narrow in terms of, I mean, quality is there, companies are there, they're stable, but companies which are very successful right now, they're fewer and fewer.
Handful, yes.
Very handful. So you have to be smart in kind of picking those companies. You have to actually anticipate who will be successful, and hence they should find position in your portfolio. See, when they are successful and then you go buy, it doesn't work. So you have to anticipate rightly and position your portfolio like that. And the QGLP, the format which we talk about, our philosophy, which we'll talk a little later, that philosophy does exactly that. It anticipates where the ball is going to be, and that like a right finger, he is there, hoping that ball will come, and then he will shoot the goal.
Okay.
But I also want to address the 1 year forward P for the indices right now is around 18, 19 times.
Yeah.
Does this number matter right now anymore? I know that it is higher than the average, historical average that
More
we
like
see.
15, 16. Yeah, it is there, I understand. But earnings itself is depressed. See, how do you do the PE multiple?
Right.
Price? See, when we are doing markets, then we are doing the total market cap. Now, do you know what is the total market cap? It is 110 lakh crores.
Right.
Okay. Now, the total profits of all the listed company is about 4 lakh crore plus. Okay. When you do that, it works out to be about, it will be a little higher actually.
Right.
Because market cap is including the loss-making companies. Correct. All the banks are making losses, but their market cap is also there. So, for aggregate market, it might be even higher than 18 or 19.
Right.
Okay. So, the issue is that earnings are depressed. The market cap to GDP, corporate profit to GDP, there is a correlation.
Yeah.
So, you are on a 145 lakh crores of GDP, you are making just about 4 lakh crores profit, which is less than 3%. Okay. The normal levels are between 3 to 7 or 8.
Okay.
Okay. So, as the economy recovers, what will happen is the GDP will keep growing at about 10-12%, and the corporate profits will not grow at 12%. Whenever it starts, it will grow at 15%, 20%, 30%.
So it will exponentially increase.
Exponentially increase, and eventually it will peak out at say 6%. Okay. So in 6 years, next 5-6 years, GDP will definitely double. Nominal GDP will double to say from 145 lakh crores to say 300 lakh crores. If by chance the corporate profits are about 6%, so you're talking about 18 lakh crores profit. So from 4 lakh crores, you'll go to 18 lakh crores, which will be 4.5 times. So keep the P multiple same, you are talking about 4 to 5 times in next 6 years.
Right.
Mr. Agrawal, that's an extreme bull case scenario, isn't it?
But we are bulls.
Well, I am not denying that, and I'm going to question even that position in just a bit.
Yes.
But you don't think, therefore, just to get it in very simple terms, as Agam asked you, you don't think the markets are overvalued right now, given that earnings season after earnings season, we seem to be stacking up
Markets are not
disappointments.
overvalued. Stocks could be.
Okay, stocks are overvalued. Yeah,
Stock,
but in
I
pockets,
mean, these are
in
stocks,
pockets,
yes.
in pockets.
Always. You'll find some, if there's a madness going on for the relative performance or something, you cannot, I mean, in a market of 3,000 stocks, there will be 10, 20, 30 stocks will be excessively priced. But not the market as a whole. At 70% to GDP, no market, I mean, India has traded between, say, in the absolute worst of the day, maybe 40% to 180%. 2007, when we peaked out, our GDP was 45 lakh crores. My market cap was 73 lakh crores. 1.8 times. Today it is just the ulta. We are at 110 lakh crores market cap and 145 lakh crores GDP. So at 70% to GDP, it can fall by 10%. I'm not saying the market cannot fall up by 10% or 15%. I'll be very surprised after 12 months. I mean, at least give investor 12 months time. In 12 months, it is significantly below current levels. I'll be very surprised.
Okay. I'll be very surprised that in 12 months it is significantly below current levels. I think you should read that sentence very carefully, Agam, because essentially this is, Mr. Agrawal saying it may move up or down, but there doesn't seem to be any big depletion activity that's lined up according to
Yeah,
him,
but
right?
during 12 months, there could be a deep
No, that's
correction.
fine. I get it. I know.
But it must come back.
Yeah. So I'm just making it sure that all our viewers are, getting every word carefully out there. Sorry, go ahead.
So, sir, you've extensively spoken about value migration in a lot of your previous conversations. I want to know where is that going to in terms of businesses and sectors over the next 5 years or the 10 years? Because I know that market dynamics are extremely and rapidly changing from month to day to second, every second. So where do you see the sectors which should benefit or the sectors which could come up from here?
Yeah. So, value migrations are, it's a long story. I mean, apart from large, it's a very long story. So, very near home, public sector banks to private sector banks.
Right.
But that shift's already played out, hasn't it? Not yet?
We are only 25%, 30% in private sector banks.
Okay.
And 70% is still with this so-called public sector
So
banks.
the large part of that transition or shift has to yet play out according to you?
No, it will be other way around. 70% will be private.
Yeah, I get it.
30% will
So
be...
this transfer of let's put it this way, the business,
Yeah.
sort of from public sector banks to private
Yeah,
sector
and
banks,
now,
is only half played out according to you.
One
yet.
third.
1/3.
And the best is still ahead. So what can they do is that now there is a banking license on tap. So you don't have to be very blessed guy to get a license. Okay. Now 20 licenses have already been given, and I don't know how many guys will come and take it on tap out of tap in next 12 months or so. So what happened last time? You got out of the 10 or 15 licenses which are given, you got one HDFC bank, you got one Kotak bank, you got one. So many in bank. So all these banks, ICICI Bank, Axis Bank, these are the ones which are huge wealth creators. We are going to see. I mean, when HDFC Bank came, it got listed at $40. 200 crores was the equity in '96. For 800 crores, you could buy the entire bank. Okay, today the bank is 3 lakh crores.
Yeah, no.
So what I'm saying is these kind of opportunities are going to come up. And what HDFC Bank did in 20 years, some of the banks are going to do it in 10 years.
Okay, so I want to know which ones you're talking about.
So
But before I put that question
but
to you,
they just
I'm
want
a
to sell a
little-
license.
No, I know, I get that. But I'm just a little concerned about where we are in the, sort of the asset cycle or the bad loan cycle. Because for a very long time, we saw it play out in the PSU banks. And in the last few quarters, we've seen it play out in the private sector banks as well. You've seen that happen with Axis Bank. You've seen it happen with ICICI Bank. And word on the street is that it's in fact going to get worse from here on for the next few quarters. So therefore, how do you take stock? I mean, I'm looking at this from an investment point of view, not trader point of view. So I'm not saying what do you do next week or next month. But are you fearful that a large part of the business that these banks have been doing is fairly suspect at this point in time?
So I don't have any view on that. You might be knowing better about them. Okay. So the way we play is that we buy the banks which don't have these troubled assets. That's the only way to play it.
But how do you know that they don't? Because we've discovered in the last few quarters that they were pretending they didn't have it.
Yeah, but that's where the investing skills come now. We have to do some homework.
So then you're buying HDFC Bank, which doesn't have a book in that side at all, right? They're mostly focused on consumer loans.
Why do I have to have troubled book in my book?
Okay, fine. Okay, so then we know you're invested in HDFC.
Yeah.
That's it, right? I mean,
that's
not you, but that's the better
see,
pick. Yeah.
The point is, when you know the credit cycle is against you, and surprises are going to come. Even the banks don't know how many book accounts will go bad. So stay away. And at somewhere there will be an opportunity for us to look at those banks or, that's not my style, to buy what was very cheap, what is very cheap and the asset cycle has gone through. But fundamentally avoid these kind of situations.
So you've said two things to us so far, Mr. Agrawal. You've said that you're expecting the large part of the shift from the public sector bank to the private sector bank yet to play out. You said 2/3 of that strategy is yet to play out, right?
Yeah.
And on the other hand, you're still telling us that many of these private sector banks, in fact, might not be disclosing the real status of their assets.
I have
So
not said anything on
stick
that.
to the safe banks. Don't
Yes,
buy now.
because I'm an investor.
Okay.
I have a choice. I'm paying full price. I'm paying price to book 3, 4. I have a choice where to invest and where not to invest. I don't have to take responsibility of all the banks which are there. I need in 17 stock portfolio, 15 stock portfolio. I need 2 banks, and that's also not necessary to have a bank.
Yeah.
When I'm finding absolute pristine bank, pristine NBFC or housing finance company, then only I buy. It must be quality, growth, longevity at reasonable price. Period.
Okay, I know you have lots of questions. Excuse me, I have one more question
No
on
worries, no
banking,
worries, yes.
and that is to do with the fact that even an HDFC bank currently today stands under threat because of all the, what everybody calls fintech, all the technology changes we're seeing happen to the
That, of
financial
course,
and payments business, right? So when do you judge that, well, this has been a great investment, but it's time to get out?
Yeah, so we are still not seeing signs of technology hurting them. Probably technology is helping them. They're in the forefront of technology implementation, but one has to remain open to complete digital migration. Now, it could be third level of value migration, where from PSU bank it came to first generation private sector bank, and from first generation private sector bank to the value can migrate very rapidly to second generation digital banks.
Okay.
But we are yet not seeing sign of. Somebody has to make money, isn't it?
Yes, of course.
So when migration happens, it's a better business model. So you have to see, because this is a very large profit pool. I mean, in banking system, you make almost 1 lakh crore profit. So profit pool is very large right now because of depression in public sector banks. Otherwise, private sector itself must be making upwards of 30,000-40,000 crores. Okay, so this is a very large profit pool. So somebody has to show me that I have opened a digital bank and it is making 1,000 crores profit and it is looking to be the way to go, and it is a threat to HDFC Bank. So by that time, we are not slipping.
Okay. One final question, and it's coming from a viewer, and he asks, "Can you suggest any good books to read?" And I thought that's a good note to end on.
You can run your camera across the
your
library.
bookshelf. Okay,
Yes.
we'll do that. No, but a couple of because we run a very popular sort of segment on Bloomberg Quint as well called Libraries of Leaders. And where we track the books that people read and the books that inspire leaders like yourself.
The book reading is a big game. I mean, in the sense that what is that for a startup? I mean, the best read on investing is those 40-50 years of letters of Warren Buffett.
Yeah.
Okay, if you are a Buffett bhakt. If you're not in that, then also you should read actually. Okay, so that will definitely take you from a level to different level. Second, you can see these are all heroes you have to find. Basically, say Peter Lynch or Benjamin Graham in security analysis and intelligent investor. Then you have
Phil Fisher.
Phil Fisher, common stocks and common profits. That's a absolute must read. In fact, all the tennis they come here for 2 months, we give them. We give a
you gift a copy of it.
And we expect them to do the scuttlebutt, and that's what tells you what to do. Actually, QGLP is nothing but basically scuttlebutt, much more understandable fashion. So, I mean, a company is a company. It's a story. It's a somebody's journey. It's a piece of art. So, how do you figure out which piece of art is valuable? What are the things you look for? And in that piece of art, what I try to look for is that which company or which piece of art is going to make a lot of money. You make only as much money as the company makes. So our job is only to figure out, not this global macros and all. We have to figure out who is going to make money. Period.
Do you read anything but financial books? Any fiction, non-fiction? Bollywood?
Yes. After Friday, it's all like today is Friday now. Party starts.
Okay. Yes. Let us not delay you to the party then, Mr. Agrawal. You've been very generous with your time, and we're very sorry if we've exceeded it. Thank you so much.